Hello folks, this is the TheoTrade Nightly Report for Tuesday, May 24th. My name is Doc Severson. I'm going to start out with a NASDAQ chart here. This shows all of the price action that's occurred over the last about 4 days or so, even the Globex price action, which is after hours. So where we started from was kind of last week. We were trading in a range until we got to Friday, and Friday started this nice rally that got kicked off early. However, it really didn't stick into the close. We actually had a very weak close on Friday as nobody was willing to take risk into the weekend. And that kind of carried over on Monday, so yesterday, as we saw the price essentially go nowhere throughout the entire day. But range contraction like this leads to range expansion, and after some early probing of some support levels down here, most of us woke up to slightly elevated futures numbers, but I don't think we had any idea what we were in store for, because, I mean, how often do we see price action like this where we just do not pull back throughout the day, period? So if we pull out to the daily chart, we can kind of see what's been happening here the last few days. The NASDAQ has been coming very gently down here over the last few weeks, really since the beginning of April and even through May. However, what we did was something very important, was to essentially set up a higher low down here, a higher low. And I noticed that, and we actually went long over the last couple of days and got out of a spread today. We're just looking for our fair share in these types of trades, because what we've seen is that every time we have a decent move to the upside, it's getting faded. So I'm not necessarily expecting to see this go up and over this level just yet. I think we might have just sideways price action as we get into the weekend, setting up those what we call railroad tracks. You know, what was kind of odd as we look at the actual tick values for today is that we didn't really see anything that extreme. So considering how extreme the price action was, we didn't really see that many values above 1,000. So we didn't really have that many buy programs, at least initially. In the first few minutes we certainly did. But throughout the day it was just consistent buying pressure. Again, this is very similar to what we see in an opposite context when we see a buyer strike, where basically nobody's buying and the price very quickly drifts lower, but in a very, very mellow manner. We saw the exact opposite today. We almost saw like a seller strike today, as the price basically just sort of drifted higher all day long with very few buy programs along the way. Here's the advancers minus decliners of the S&P 500. So you can view this chart kind of as if the advancers equates to the decliners of the S&P 500, we're going to have a value that's right around here. And this is why yesterday's value made sense, because essentially we got nowhere. Price just went sideways. We had a fairly positive day on Friday, so you can see that we had essentially about a net 300 buyers and only a couple of hundred of declining stocks or less. But today, again, was one of these extreme values. Anytime we get over 400, it's a fairly extreme value where very, very few stocks are declining. The majority of them are being accumulated. You can see here, looking at the S&P 100, which is the big cap of the S&P index, that we had 94 advancing and only 8 declining. So you can see some of the big winners here are some of the biotechs and technology stocks, biotechs and technology across the board here. All right, so a lot of these were just up big, big, big. And so you have to wonder why something like this happened today. Well, I think a lot of it revolves around the Fed. As always, there's a lot of uncertainty around the Fed, and anytime that the market gets a sense of certainty as it relates to the Fed, it's going to respond in a very positive fashion. Now, I know that this is really, really frustrating for many, many traders, myself included, just because we have an external body which is pushing the market around and adding risk to this externally. So it's not just price discovery alone that's causing these moves. It's just the regular cycle of what we're going through right now, as the Fed tries to ease out the bumps of this market by interjecting itself. Now here's what we've seen just in the last week or so. About a week ago, we saw the chance for a June rate hike, and so that's Wednesday, June 15th, is going to be the next Fed announcement. And this is the full enchilada. This is where Janet Yellen not only issues the press release, but also follows up half an hour later with a full press conference out there. And just about a week ago, we were sitting there with a 3.8% chance of a rate hike up to 75 basis points. And now, as of today, we are up to 37.5%. So this is a whole lot more certainty that the market is feeling. Now, still, that still means that there's a 62.5% chance that nothing will happen. And actually, I think the market would respond well to that because the free money party continues. But then again, on the other side, if they do hike, not only is that certainty like, thank God that's out of the way, number one, but number two, that also sort of sets the bar that, okay, now we know what we're dealing with, and now the financials have a little bit more room to be able to work with inside of there. The problem that we have right now with the financials is that they have no margin to be able to leverage that. So with a little bit higher interest rate, they get a little bit more room to work with. And so some of those compressed margins they've been working with over the last several years will start to expand a little bit. So what does this all mean to us as traders? What does today's move and what do recent moves and what does a potential Fed hike mean to us as traders looking forward? Well, to answer that question, I have to go back to the charts and use multiple time frames. Okay, let's go back to the S&P. So this is just the futures contract, and I'm looking at a monthly, weekly, and daily chart basis. What is showing in the charts right now? Well, after an enormous move that we've had since March of 2009, that really topped out last summer, we have been in this enormous consolidation pattern really for the better part of a year and a half now. Again, markets can correct. Anytime we see a market just going berserk like this, we're going to have some form of correction. Now, most of us think of a correction as, like a 20% drop in price from the high, and usually that's pretty violent. And we've certainly seen our share of these. In fact, we've actually had some 10% moves in here, 10% plus moves over here, and 10% plus moves over here. I think these are somewhere like about 13% from the highs. So the market has had every chance to go into a full-on bear, which is going to be 20% plus or higher than that. But instead, the market has limited itself to these about 10 to 13% moves. And instead of going to the downside to correct, it's been going sideways. So we can look at this as one huge consolidation period. This is still a corrective consolidation period. So the thing is that markets do not have to drop by 20% just to correct. That can also go sideways too. And so far, this is what it's been doing. Now, myself, in January and February, I was thinking, okay, here we go. This is the beginning of a bear market. S&P 1600, here we come. And so I was beating that drum just like everybody else. But right now, since we've recovered so quickly, 301 points back to the upside in the space of no time whatsoever, then right now we are still back in the game, and all of this consolidation energy can still break to the upside. It's got some obstacles breaking above 2100. If that happens, though, then we have to give it equal weight that this consolidation period might be over with. Otherwise, what we have to be very, very cautious of, especially sometime this summer, is something coming along and disappointing markets and or interjecting a huge amount of uncertainty in the markets. Because right now, with where we are and how high we are, that this can rapidly drop points off of here. So this is a very, very unstable, tenuous situation that markets are in right now. So as we enter the summer period, I think this is going to become worse and worse in terms of the potential for this to break out or break down. Nobody's going to know until it's already happened. So how do we do something like that? Well, we watch the price action, we watch trends, and we watch how larger time frames set the tone for smaller time frames. So right now within this weekly chart, we can see the context for this huge consolidation pattern. However, we're in the midst of an uptrend right now, a 301 point uptrend, and what we saw was a higher low get printed recently. And we'd like to see whether or not this price is going to break higher from here, or whether this is just going to stay within a range from 2020 or so on the ES to just over 2100. Now I'll finish up with my caution for this is that if this move stalls and prints a lower high, then this could rapidly drop from here. This will only happen if some kind of uncertainty gets interjected into the market, which certainly could be the case this summer if we start to think about all the uncertainties that are out there, not just across the US, but also globally. So this could be a good summer actually for trading, with a little bit more room to work with than what we saw last summer. So last summer was incredibly compressed with a range. I doubt we are going to see that same effect repeat itself in 2016. That is it for tonight's report. Thanks for listening, folks. We'll see you soon.